Welcome back to Real Estate Mindset. Today's video is going to be bonkers and you know it. So it's going to be on an article by Redfin on basically some indicators that the housing market is already slowing down. So it's been slowing down a lot more quicker than I actually originally thought. We're entering into a transition stage right now where essentially the housing market is going to transition from a very toxic seller's market to potentially a really profitable buyer's market, depending on whether or not how out of control it gets. So today we're going to look at some leading indicators that is going to spell out exactly how much we've slowed down so far and essentially what to look out for as far as if you want to check the indicators to see for yourself if your local housing market is slowing down. Because here's the number one thing, you guys, not all housing markets are the same. It really differs from city to city. There's cities, there's markets within markets, cities within areas. So we really got to look at things individually, but right now we're going to kind of talk about nationally, because nationally is going to paint an overall picture of our housing market. So let's jump in. But before I do, remember, I'm not a financial advisor. I'm an opinion sharer, realtor in Houston, loan officer in Texas. And if you guys could, please like this video for me, subscribe to my channel, and share this video. And as always, comment below. Let's get started on this article by Redfin right now. So you guys, essentially, it's going to take a look at coastal markets because the slowdown is not, like I said, it's not in all cities. It's predominantly in coastal cities. But the Redfin news article is called "Pricey Coastal Markets Show First Signs of Housing Slowdown." And that, again, you guys, that's important to know. Not all cities are the same. So if you have to buy right now, and if you can kind of select your area, choose wisely. If you're sitting on the sidelines, this is all good news for us, right? I'm sitting on the sidelines. I'm currently renting, looking for a primary residence. I converted my last primary residence into a rental. I'm sitting out right now instead of buying. Let's go on to the first part of this article right now. You guys, I really liked how the author kind of used this analogy. Here it goes. I think of the 2022 housing market like a ship slowly changing course, rather than something that will come to an abrupt stop. The ship is still facing north, but some flags can be seen wavering in the peripheral, telling us that a cooldown is taking shape. In pricey coastal areas, including Los Angeles, San Francisco, Seattle, and Boston, fewer people are starting online searches, touring homes with real estate agents, and applying for mortgages than this time last year. So that's a pretty cool analogy. The boat changing course that won't, I think it actually could be abrupt, just depending on how out of control things get as far as the flip side of this coin. Let's continue with this. We're taking note of the following early indicators which suggest that a growing share of home buyers in expensive coastal markets are getting priced out of the market, a sign that nationwide cooldown is beginning. They're impacted by the 1-2 punch of soaring mortgage rates, which reached 4.67% by the end of March, a 3-year high, and record high home prices. So essentially, you guys, we're starting to see the first signs of the cool down, which again, that I ultimately believe is going to lead into a market crash. And, I'm always trying to tell you guys, the reason why it's better to have a higher interest rate is because you're not going to be trapped upside down in your house with upside down equity, essentially. So if you buy now an overpriced house, you could get trapped in it, right? So that's the difference in a high rate versus a overpriced house, right? Now let's continue with some of the factors that Redfin is going to point out on why they're saying the housing market's cooling. But remember, not all places are the same. So they're going to kind of look at a nationwide scale right now. Take a look at this first point. So the first thing the article is pointing out is a dip in Google searches for homes for sale in certain coastal areas. The number of Google searches for homes for sale in Baltimore dropped about 16% year over year in the second week of March. The biggest dip of the markets we're tracking, followed by a trio of pricing markets: Boston, -15%, San Francisco, -14%, and Los Angeles, -13%. And here's the kicker. That's compared with a 7.9 nationwide drop. So in other words, you guys, online searches for homes have essentially dropped 7.9% nationwide, which essentially means way, 7-8% is a lot to me. But because that's month over or year over year, I think it's going to get worse from here on out. I think less and less people are going to be searching for homes. It's already down 8%. It's interesting to note one of the indicating factors of a cool down is the online searching. Google is huge. Google's massive. So the fact that 8%, it's down 8% nationwide is a huge indicator of a slowdown. Let's go on to Redfin's next point right now. Okay, guys, I essentially grouped this into one, even though it's kind of 2 points they were trying to make. The first point is number two, home tours are down from the beginning of the year in California, but they're up nationwide. So this is only applying to some cities. Let's read. Actually, tours of for sale homes in California have dropped 21% as of March 31st from the first week of 2022, according to the home tour technology company Showing Time. That's a major turnaround from the same time span last year when touring activity in California rose more than 76%. Nationwide home tours were up 23% since the first week of the year. That's down from last year's 37% growth, but not as steep a drop as we're seeing in California. So there's already a drop in home tours. Okay, it's important, like all these little facts, you guys, it's super important to really understand beyond our hope and beyond our emotion what's going on in this housing market. So the fact that number one, online searches are down. Number two, tours are down. And essentially the second part of the article is going to go into how less people have contacted agents about purchasing homes. So again, I group that into basically on the ground activity or boots on the ground activity. So essentially tours are down, communication with agents are down. Let's see what the third indicating factor of a cool down is right now. As you may have guessed, a decline in mortgage applications is another indicator. So this goes on, a decline in mortgage applications in pricey California metros. Again, you guys, you see it's starting in some areas and it should probably expand throughout the nation, but it's starting in some areas already. In both Los Angeles and Orange County, the number of home buyers who applied for a mortgage dropped 18% year over year in February. And in both San Francisco and San Diego, the drop was 13%, Boston 7%, Seattle 5%, and Washington, D.C. 3% were among the other pricey coastal metros with year over year declines in mortgage applications. That's according to a Redfin analysis of mortgage rate lock data from the real estate analytics firm Optimal Blue. This bottom article here goes into a little bit more detail onto the nationwide effect in mortgage application declines. The February dip in mortgage applications in California and other pricey coastal markets foreshadowed a nationwide drop in March. Mortgage applications were down 9% nationwide from a year ago during the week ending April 1st. So, number three indicator, you guys, 9% drop in people asking for money, right? In applications. And as you know, depending on what data you're looking at, about 75%, and I expect it's going to be more, but about 75% of the home purchases are from people that need to get financing, right? So the fact that 9% of mortgage applications are down is an indication, again, of a slowing down in our market. Overall, this is how I feel about this article, and this is just my opinion. First of all, I think it is astonishing how little the Federal Reserve and the chairman did to combat inflation as far as only a 25 basis point increase in the federal funds rate or the discount rate. It's astonishing the impact all of that has had. Essentially, the Federal Reserve, when they talk, it's almost more powerful than their actual actions right now, because again, this has just started. I can actually see them coming back on their 50 basis point hike in May and in June that they basically warned us about. They may not go through with that because the market is already unraveling, and that should be an indicator of how bad the housing market bubble is. If the housing market bubble wasn't that bad, we wouldn't have such dramatic effects from such little that the Federal Reserve is doing. And I know, quantitative tightening is happening and things of that nature as well. But again, very little action from the Federal Reserve. But when they talk and when they speak, very drastic impacts in the market. It's very important to notate that because, again, it's cooling down already, but I don't think it's just going to cool down. I think it's going to pop, and I think we maybe head into a recession again because the 2 and the 10 inversion of those yields. So all things you guys need to watch and be aware of so that you can be a winner on the other side of this. Now, again, you guys, if you're renting right now, or if you're out of the market, work on credit worthiness. Save your money, find other income sources as well. There's a bunch of other income sources these days, and stay patient, be confident, love your family. And if you want to invest in real estate or you're currently investing in real estate, I wish you luck and I hope you win.